So this video is sponsored by Bityard, a crypto exchange with 9 out of 10 stars by the Coin Bureau guy, 400 cryptos to choose from their spot exchange, derivatives that include commodities, forex and traditional markets, as well as inverse perpetual coin futures, USDT perpetual futures and leveraged tokens. You can even set up a copy trading account so people can copy your trades and you earn commission on those trades, or you can follow other traders who have better results than you. Set an account up with a link in the description and get mystery box bonuses for completing random tasks. Bityard. Hello everybody, welcome back. Let's have a look at Algorand. I know what it sounds like, but that's what we're going to do. So this is one of my big buys from the big punch down, the capitulation low, and it's the idea being is that I'd like to own enough Algorand for it to be considered passive income in the not too distant future. So we're talking a couple of years away from now. So buying at these low levels, the size of the buy that I put in. You know, if we can hold above $2 and stay above $2 for maybe ever, then that would effectively be like a decent salary, really, for me. And that's what my plan is. Now, there's a few reasons why buying at these low levels is appealing, and it's not saying that it can't come down lower. It definitely can come down lower. It's been down lower in the past, all the way down here in the March crash. It was down below 10 cents basically. So it can obviously come down lower. So I'm not under the illusion that it won't go lower, but there is a plan involved. Now Algorand is one of my, I suppose, favourite as far as the project and the team and all that kind of nonsense, because they're highly capable and they're not a bunch of scammers basically. And I don't expect it to just turn into lunar dust basically. But it's always been a bit of an underperformer, but we do have these big peaks in the past, and I would expect that these sort of big peaks will take place again. But for me, the overall vibe is to buy low and effectively ride it to the point where it remains above $2 some point over the next couple of years, and that point I'll be able to basically just live off the staking rewards, really. So that is the plan. So let's have a look at it in the short term, because it is possibly something that's worthy of a trade as well. Now, and to put this into context with the market as it is at the moment, Bitcoin is in a descending triangle, a bearish formation. It's also been rejected 3 times more or less in a row on the 200 exponential moving average. So we have one over here, and we were a front run again just yesterday. So we're not under the illusion that Bitcoin is going to break out and go crazy. We're more accustomed to the prospect of it going down now over time in a bear market. Maybe more like what we generally thought was going to be the case as we were to peak around December with your average 4-year cycle kind of vibe. Now things are being kicked down the stairs by things outside of the chart. I know people were talking about lengthening cycles, which could have been the case. This peak over here corresponds to many other peaks of many other markets, including traditional markets like NASDAQ, S&P, and all the other bits and bobs. So this is NASDAQ that we're looking here on the 4-hourly. I suppose there's nothing really worth thinking about on the 4-hourly. This is NASDAQ on the monthly. There you go. You want an allocation in something, do you? Take a piece of NASDAQ with you. So I'm not, again, suggesting by any means that the NASDAQ is going to break out of this descending triangle of its own. It's definitely pulling back to a large extent. And in the past, on the monthly, we've seen us hover around at tragic times. We break down below the 50 exponential, but a lot of the time we will hold on the 200 exponential. This is your .com bubble. This is your housing market collapse. But generally speaking, when we do have pullbacks of large degree, that's your 50 exponential moving average. There's your 50 exponential moving average once again on the monthly. And we're not too far from that. That would be around 11,200 thereabouts with a horizontal in line. So the reason we're talking about this is because traditional markets and Bitcoin and most things are all feeling the same kind of thing, which is downtrending because of inflation, Federal Reserve monetary policy, quantitative tightening, all this stuff, and all the other things that feed into that's taking place this year. This is a mad year so far. It's crazy. Anyway, I digress. So in the next couple of days, the next CPI report, the data for inflation, is going to come out for the US. We don't care about any other country. We don't care about them. It's all about the US. And yeah, that's coming out, I believe, on the 10th. I might be wrong, but all information points to the 10th. Now, since the last CPI data came through, it would appear that I would expect to see inflation peaked last month. And so even though inflation is likely to continue to be high, I think it's going to be the first time now that the CPI data will show that inflation is actually coming down. It had slowed on the last report quite a lot, and this time I expect it to go down. And so with that in mind, I'm trying to put a lot of pieces of puzzles together to suggest that we're going to see some upside this month in all markets. And that would go hand in hand with what I've been saying about the Bitcoin dominance, suggesting an alt season around that 48% dominant zone. And the alt season, for some will be 10%. This is against Bitcoin, so Bitcoin pairs. Some will be 10%, some will be 50%. You might even see some over 100%. And the reason we say that is that historically, in the last year, we have had reactions within this box. And if we measure it right down the middle, we get ourselves a nice 48%. So we tagged it here, had a decent season, tagged it again here, front run it here, decent little season. We're approaching it once again. Now, again, no illusions here. This is a bullish chart. So we turn on all the indicators. We are pretty bullish on the weekly, not massively on the weekly, I'd say, but it's gonna transpire onto a bullish weekly. It's the daily, really, where things are looking pretty awesome for this. So this is what I mean. We're looking to do some, I suppose, scalping spot trades. Get out of some Bitcoin, put it into altcoins, back into Bitcoin again, stack those sats, maybe 10, 20, 30, 40, 50% more Bitcoin once this is over. Now this is, it's a dangerous period to do it in, but it's possible, and it would suggest that alts will be the better place to be for what could be this June rally for Bitcoin and altcoins. I just think that all markets will rally, but still, obviously maintain their general direction down, right? So we can always have a big rally. So for me, I would be targeting on Bitcoin and the obvious areas, like a 200 exponential, which is about 39,000 at the moment. Maybe we could move up to 40. I think we're likely to get a front run from that. I think the exponential is more likely than a simple horizontal flat figure of a 40. Everyone will be targeting that 40. So we don't know where this will be at the time. It's descending. It's down every day, maybe by $100 or so. And I think that is not completely unlikely. If we break out of a formation like this to the up, we would likely have continuation, and we will meet our 200 exponential moving average in the upper 30s. Then we'll find a rejection from there, as all markets and all cryptos reject, and probably continue down with this with this general market, which is a downwards market. All markets are down. Now it depends on the CPI report. I expect it to show that inflation has peaked, but if it really does show a real decline in inflation, then this might actually end up having continuation. Now the main thing would be to break above a 200 exponential, find support on it, get an uptick on it, and continue up. That would be lovely, and that could obviously happen as well. We're really speculating on data that's not yet been submitted and processed and spat out the other side. But it is interesting to think about it like that, because the reason I sold around here was not to do with so much about the chart. It was more to do with things going on outside the chart, aka the Omicron situation. So that was around here. We got the dump after that, and I found it very difficult to get back in. So the idea was I was going to dollar cost average, starting from 40,000 and down and down and down. So obviously we all know that strategy. I've been talking about it all the time, and I think that is the strategy that everybody should employ around these levels and lower. Dollar cost average, whether you're working for your money or if you've got money that you from where you sold higher, just dollar cost average into major areas of supports, anywhere from 30, but certainly on the way down, definitely. Because the overall picture is that if we are in a bear market, it either began here, and in my opinion, we could even think about it beginning here. I've made videos on this in the past, so I don't need to go crazy and explain all the reasons why a bear market could have begun here, but it's effectively to do with time and volume, and we saw a big peak around there on the weekly money flow index as well as other things. And there is also a lot of evidence to suggest that we are likely to bottom sooner than you think as well, because we've got these money flow index divergences marking the lows. We had a low here and a higher low here marking the absolute bottom. We had a low here and a higher low here marking the absolute bottom. We've got a low here and a higher low here. Like I say, it's not going to tell you the figure, the absolute dollar of where the low is, but this is quite a pronounced money flow index read, which is very low, and we could obviously come down a lot lower, which means price will come down a lot lower, but maintain the bullish divergence. Obviously, we've got it at the moment. We could have it here, we could have it here, we could have it here, we could have it here. But it would suggest that we've got the first start of what has previously shown us where the bottoms are in, but it doesn't tell us, obviously, the price. From here to here was a 50% price difference. From here to here was about a 40% price difference. So from here to here so far is roughly about, I'd say probably about 25. Measure it from this level. I believe it was that level. Let's just double check. Okay, so we'll measure it from the candle body open and close of the month. So it's around here. So we're down here about 23% at the moment. So again, we can easily come down further. Anyway, this is supposed to be about Algorand, so let's get back to that. So again, CPI inflation data coming out this month. I think markets are looking to find temporary bottoms for what could be a decent rally, the alt season, given to us by the dominance chart, rejecting from an obvious area. Altcoins being a state of play, basically, for the moment. So, and again, highly risky. So I'm not suggesting any of this is going to work out. It's highly risky, but it might, and it's worthy of a casual little trade from a spot trader's perspective. So we look at this chart here, Algorand to BTC. We used to remain in a general sideways channel for the most part. Anyway, this is where Bitcoin took off, rallied 300%, left all the sats behind it. This is similar to that as the Bitcoin dominance has been rising, but as it falls, we could find ourselves back within this channel. Now, I'm not suggesting we come up to the top of the channel. That would be pretty impressive if we did, but we could come up to the actual channel itself before the next level of rejection. That also would correspond with the 200 exponential moving average. So we're looking for maybe at best a 50% move on algo to its BTC pair if this situation occurs. Positive, positive, good inflation data, and then markets reacting accordingly to that. So your Bitcoin situation is looking okay. Your Bitcoin pair is looking okay for that. We've got divergence brewing on the MACD and on the RSI, and money pouring into it at the moment from a Bitcoin perspective as the money flow index is pointing up. Let's have a quick look over here. We're on a horizontal support that we've bounced from. This corresponds to this drop, this resistance. This is a bit peaky over here. These supports over here, these resistances over here, and the first major rally that we had in the alt season. So a significant level as far as its dollar or its tether pairing is concerned to actually make a move from there. And if we think about the 200 exponential over here on your tether pair at the moment, that would mean 111% move. So again, that's very large for something like algo, but algo can move. It has moved in the past, and when it does it quite quickly, similar to the way XRP does its thing, really. But again, these are all top targets. At the moment, we're getting rejected on the 21 exponential. If we break from there, we would have to make our way above the 50 exponential. So a realistic target for take profit, first of all, would be around this level, which currently is about 21%. That's your 50 exponential moving average. Obviously, it's facing down. That'll be less and less every day. And if we look over here, we've got a nice divergence forming on the MACD, RSI, and money flow index as well, all showing positive signs for a move up. So at least that 20% move. Whether it continues on after that is different. We're about to get a positive crossover here on the histogram. On the 3-day, we've got divergence as well on the 3-day, and we are pointing up as well. Now the drawback over here is that we've got a death cross. It's the first death cross Algorand's ever had on a 3-day. It's not old. It's not that old. In 2019 came to fruition with dramatic effect, and so that is a bearish thing. But just like any golden cross or a death cross, it's not uncommon to see it get retested. And again, the 200 exponential comes in around 94, the 50 exponential comes in at 78, and then we've got a 21 exponential moving average at around 55. These are all realistic targets as well, and there's no reason why any of these can't be pushed. 30%, 83%, and 129%. So again, I'm not suggesting that this is going to reverse and go all the way to the moon. I'm just pointing out one coin amongst many other coins. Many coins look like this, many altcoins, but I'm more inclined to try and trade the larger cap ones, the ones with a bit more, what's the word I'm looking for? A bit more integrity to them on a fundamental and a team basis than your average shitcoin on KuCoin, which can obviously yield some serious gains, but a lot more likely to basically go to wrecked city beyond your wildest dreams. So again, yeah, I'm not trying to put this in a really bullish light. Certainly not. It's just one example of many, and one of the altcoins, like I say, that I've picked up a lot of on that big low, which effectively got revisited several times and could quite easily come down lower than that. I'm not trying to spread hopium on this one. I'm just pointing out that we do have a few things going on this week that could lead to a rally, a decent relief rally, that alts will certainly at this very moment appear to be will outperform Bitcoin, and that's the alt season that I've been referring to, that I've been touting to, and the reasons for it is that we're in the resistance box. Despite being a bullish chart, we're in the resistance box, and so this rally, if we were to get it, which I think that we will, Bitcoin could go up to the upper 30s, maybe even dance around the $40,000 zone, and it's going to take altcoins with it, who will mostly outperform Bitcoin. Now, as there's a lot less money in the market at the moment, it's you're not looking to get absolutely stonkingly rich. This is simply a matter of rotating out of a Bitcoin position into an altcoin position and then back into a Bitcoin position again. Not going crazy, not hoping for the moon. Maybe start taking profit around 10, 20, 30, see where we go, see what the situation is, monitoring everything via Bitcoin, because Bitcoin going to direct the market whether it's up or down, and being grateful for what it is that you've made throughout that period. But it's not going all out of Bitcoin, all into altcoins, not at all. That's not how it works. That's not what we're looking to do. It's about slicing a little piece off, because the lower the resistance, the lower or the smaller amount that you want to be putting in. Obviously, the higher the resistance, you're getting a rejection around here, you go all in, more or less, all into altcoins, which is what we did, and that's where we lived the absolute crypto dream. But at this level, 20% max of a Bitcoin position into an altcoin position, that would be more than appropriate. Up to a 20% of your Bitcoin can go into altcoins around this level for what could be, a reasonable sized, stack in those sats. And again, the higher we go, the bigger the resistance, the bigger the amount that you put in. So hopefully that has been useful for you, and good luck to all of you. And hope you have a nice day. Take it easy.